A sharp bullish continuation peaks and leads to general head and shoulders price action, starting a sustained downtrend far beyond a moderate correction. Bearish volume and price action at regular intervals constantly produce downswings, forming a stable decline. Volume is moderate to high, but never too exceedingly high, and price action sees minor to moderate drops that don't steepen for too long. There are also regular bullish retracements back towards the clear downtrend line. All these factors contribute to the sustained drop and ideal features in a long-term trend. In this case, a bearish trend. The reverse would apply to a large-scale uptrend, presenting stability. Mid-September sees the emergence of a sharper downtrend line as a bearish spike firmly closes under 65.35. It completes a descending triangle with ideal features and an advantageous background from the established downtrend. Selling pressure decreases in mid-October for a brief pause, but decreases soon after to exhaust selling in the short to medium term. This, coupled with the following gap up fill and inclined double bottom, form the basis of a bullish foundation to surpass the stronger resistance potential from the descending triangle's downtrend line, intersecting with the 65.35 level. Interestingly, this happens in late November with lower volume. This would normally be unusual, but it is during the Thanksgiving holiday period when volume often declines. While the uptrend from November 2017 had a solid start, it began to weaken due to a clear lack of bullish volume and a major resurgence of selling volume. This also took place at the longer-term downtrend line for a normal drop back to the 65.35 level that becomes a crucial support at the current site of contentious trading. It is also interesting to note the brief rise over the long-term descending trend line in late 2017 with low volume. Again, this irregular event is not out of the ordinary when reminded of the lower volume during the Christmas to New Year's period. After a minor adjustment closer to the highs of more recent downswings, the long-term downtrend lines still have substantial resistance when intersecting with the 65.35 level in June 2018. Although these barriers are eventually passed with a decline in bearish volume and moderate bullish spikes, there is still a long way to go in recovering. Additional levels and trend lines are marked following a head and shoulders, completing with a gap down. After the intersection of old and new trend lines is surpassed in July, there is potential for the further progression of an uptrend out of the range-bound trading seen for most of 2019. A new uptrend line can be helpful as a correction and possible gap fill become more likely, after a gap up found extra strong resistance at the old 65.35 level. This was due to the intersection of the upper downtrend line from the head and shoulders. While there is the outline of a gradual shift from consecutively lower downswings to consecutively higher downswings, centering around the trajectory of the long-term descending trend line, it is too disproportional on the left side to be considered a strict reverse head and shoulders pattern. Though the general features are there and the gap up breaks what would have been the neckline area, as the 60.93 gap up level holds, a tenuous and fragile upswing begins in November. The recurring 65.35 level is eventually surpassed as the bullish situation with constant and increasingly bullish volume along with an overall decline in selling volume prevent a drop back under 65.35. Interestingly, the old 6890 to 6760 range becomes the neckline range of a Head and Shoulders pattern, with an accelerated completion from a gap down. This is in the run-up to bearish and volatile price action. That is mainly attributed to the bearish environment in the broad stock market during February and March 2020. A sizable correction develops following the formation of a relatively strict double top, with a decline that will be helpful in identifying stronger resistance potential to the current uptrend. This example demonstrates how the influence of a long-term downtrend can still linger even after the main downtrend line has been broken. Even after the early 2018 break, there were subsequent downtrends and downtrend lines that followed the same approximate trajectory to keep the chart at or below the 60s for extended periods. Also, when there is a clear descending variant of a pattern, like the declined double top, it is even possible to mark a channel, rather than multiple downtrend line variations, provided the price action of subsequent downswings is neatly contained under the downward channel, like in this case.